Okay, we'll take a look at our daily and weekly charts, bullish and bearish breaks. Market did about what it was supposed to do today. It went up where it was supposed to go. According to my futures chart, it rejected where it was supposed to reject. So nothing really unplanned or unthought of. Don't forget to subscribe to our channel while you're here. Follow us on Twitter at Daytrader Setups and on StockTwits as well at Daytrader Setups. And you'll see this red subscribe button 9 minutes from the end of the video. From that point on is a tutorial that explains the recap grids and some about our chart. So when we show a chart, you'll understand what we're talking about. Other than that, if you understand it all, you don't need to watch the last 9 minutes. Overall market this morning, this is where we were right at the open, and we turned up on the AD lines, and they pretty much ran up all day. As they ran up in this area, the market didn't do anything but just chop sideways, even though advanced decline lines were steady rising. Well, that was kind of unusual. We got the little pullback prior to the Fed 2 o'clock meeting, and then we started building a little momentum before that, and the SPY as well. And then we got this little run, very short term, turned over, and had a pretty good sell-off in the market into the close. Now this is my futures chart on a bigger time frame, and this was the cycle it was in. And generally when we go down well below the line before we turn it red, we expect a retracement back to the level. We trade this exact same pattern on the charts, and that's exactly what happened. We got this was yesterday. We got the run up this morning to that line, and pretty much that's all he was going to do. And for the most part, this just sat right here most of the day, never did really do anything until it turned back down. We remain on the SPY right inside this wedge between the 50 and the 200 day. Be nice if we can continue to hold this trend line as we tested it yesterday. We want to open in the morning, go down, test this trend line, and bounce off of it. We do not want to gap below this trend line. If we do, we're going to test the 200, and then we need to hold that and this other trend line really bad when that happens. So I think we just keep going sideways here. I don't really think anything's wrong with the market. I could get surprised. I think we keep plodding sideways here, and eventually we're going to break out of this wedge, and whichever direction we take could go down, retest the 200, and explode back up. They do that sometimes. We may just break out the top, get above the 50 and hold it. Maybe come back and retest it. We'll see what happens when we get here. We're just going to slowly plod along here, figure out what's happening. These are your weekly bear breaks. It's a pretty long list we've got already building with the middle of the week here. So you can pause the video, go take a look at those on the weekly charts. These are your daily bears today. You had about 33 stocks. Remember, I'm scanning 5,000 filtered stocks here by volume, so it's really scanning something in the 4,200 range and then taking it down from there based on ATR and price action and volume and so forth. So that's today's bears. They were all red. Some of them were real red. Gap down here, I'm assuming that's probably something to do with earnings or a news story. Here's your weekly bull breaks. It's a pretty short list. And your daily bull breaks. Had some nice performing stocks on here today. A lot of them are earnings driven, like your ADP here. PANW, nice day today again today. Wayfair, big day. It was performing nicely yesterday. I had it on the list, but it gapped up, so obviously didn't want to try to fool with it up there. We'll get over and look at our 5-day recap list, and I'll wrap this up. This video is being brought to you by STS Pivot System Charting Package for day traders, swing traders, and option traders. Easy to follow charts and scanners, trigger prices right on the charts, on the setups. We teach 2 trades long and 2 trades short. That's all. It's that simple. Just like you see on this chart, the trigger price for this trade was in the corner over here from this point on, with this price posted, not to take it up here, and it did not trigger, but it wasn't posted as a trigger anyway, came back. This is a classic, beautiful setup, breaks right here. 167.26 was our trigger price, and we developed these same lines where you can overlay them on your shorter term charts. This is a 2-minute. By not taking that trade early when it went up here to 167.11, you avoided this 30 something minute pause here. It's not quite 30, about 15 minutes. This was a 60 something cent pullback by waiting on our trigger price to get in the trade here. And we were predicting that trigger price. This didn't go green until this happened. You have that up arrow where we're showing the price to go long at, and as soon as it triggers, it immediately gives a go short because it's so close to flipping back over. So that's exactly where it occurred, was right here. And that is how simple that package is to use. Trigger prices right on your charts. Got a 7-day free trial offer, 10-day money back guarantee. Once you get this set up, it's $69 a month. And we're extending as a courtesy, if you take this package, full access to the website, including the trade room if you want to come in and out of there as well. It's not part of the charting package, but it's an offer we're letting you come in if you want to. And I mentioned this in a video about a week ago that we were going to do this. Any previous member to Day Trader Setups from day one ever paid $1 to us, this $69 fee is waived. You can come in and try the 7-day trial, no outlay of cash whatsoever. If you decide you want to go with this package, then you can sign up. Remember, the purpose of the video is we're looking for stocks coming out of consolidation, which we could have many in consolidation, and see if they break to the bear side or the bull side. The reason for the recaps is for you to go through and see how those stocks that appeared multiple days before are progressing. Day 1, day 2, day 3, day 4, day 5. So these were the ones that were on the bear zone yesterday, and you can see the ones that continued down. They continue to be in the newly calculated bear zone, and if they're yellow and red check, they still got the momentum to that direction. Estee Lauder showed up yesterday, then this morning was way down. I believe that was probably an earnings move on the gap down. To get a good look at that whole list, just pause your video. And then you can pull these up on your charts and see how they're progressing. Again, the check marks and the red and the yellow all together, that's the strongest stocks in the direction of the original alert. Get you this bottom list. This is going back 4 days ago and then 5 days ago. And remember, with our charting package, we do include this as well. Our charting package is a trend reversal package. These are breaks, so this is an entirely different setup than what we trade off of on our active trader setup trading package. But we did include the bull and bear zone scans in the scanners and the criteria to find those stocks in that package, because many people's been following this for about 1.5 years that I have. So you can do this same exact scan on weekly charts, daily charts, hourly charts, 30-minute charts, whatever you want to use it for, and it's already built into the package. You can use that as a standalone item. That's part of the package. Get over to the bulls. The yesterday's and the day before, still got some. This didn't go anywhere today, but it's still up in the bull zone. Just kind of had an inside day. You had some down stocks today, of course, just with the market overall. You can just keep a look at your stocks and how they're performing. This stock continued on up, broke nice out of this consolidation. TTWO has been on the move for a couple of days. A little hesitation here at the 200-day. That's that orange line, and the blue's the 50. And then we'll move these up where you can see these little bit older ones. just a couple left on here with a check mark. And thanks for watching our video. We'll see you tomorrow. Be sure to subscribe to our channel while you're here, and follow us on Twitter, and follow us on StockTwitch, and go over to daytradersetups.com, click on Ninja 8 charting, and you can learn more about our STS pivot system charting package. Thanks for watching. This is a tutorial on our recap sheet. What you will see here is this column here is the weekly list. It's at the beginning on the weekly bear and bull breaks, the daily bull breaks and bears, depending on which one we're looking at. And then you will have 5 days following. First day, second, third, fourth, fifth. So what's here today will be here tomorrow. We'll shift over to here, then to here, then to here. So you got 5 days you can go back and look. The price here, you got the bull zone trigger price, 36.80. This is the price of the profit since this alert. This is the net change on the stock for today. So tomorrow when this shifts over here, this number will be the same where we triggered it at. That number will stay in here for 4 days. The profit will be shown based on the current price of the stock in the day compared to this price on the alert. Like for instance on this stock, $3.48 profit from this break based on this close price, up 92 cents today. This number is the profit at the high since we alerted it. It's the most profitable it's been. It got up to $4.27 profit. Pull back, closed at $3.48. As you go on over, like this stock here, SMTC, this was the break. This is the profit so far since the first day, $5.61 4 days later, and at the peak it was $6.31 profit. That's what these columns mean. The next part you'll find is this yellow line. It represents what I'm going to show you over here in just a moment, momentum. It can be on a bull or bear chart. And then trend stability, if it's green, it represents on the bulls, and the bears will show a red line for trend stability. The last part you'll want to know about, there's these check marks. They represent the bull zone as it progresses higher. Could be the same as yesterday. Down here, this could be the bull zone that's gotten higher and higher and higher as this stock went along, and it means it's still maintaining the bull zone levels. Even the new ones, it's staying above them. This is what the bear grid looks like. Looks the very same. Got the weekly, 1 day, 2 day, 3 day, 4 day, 5 day. So you got a chance to see the stability of the trade. You know if it was up or down today after winning a bear zone the day before. The stability, the momentum, and the bear zone level with the check mark. In the video, we will take this page and we will slide these up and down so you have a chance to pause the video and see every single stock that's in the list. Then we'll move it up where you can see these items, and you can pause the video, and then you can see every single symbol in the list. You can go to your charts and look up what's going on. So that's what's in each one of these grids. The current day, day before, day before, day before, day before. So going back 4 days, you got your weekly there. And all this is right here is something I prepare for myself. I take this day, and this day, combine them into this watch list every day, and that's what I carry forward over to my scanners. And just a quick part about what we mean by these levels changing. This is the bull zone level that the check mark represents, the stock staying above. But the bull zone level when this stock broke out was way down here. This was the first breakout, and then as it recalculated our bull zone, that's what the green check mark means, is it's maintaining momentum. The yellow line represents this line that is our minimum momentum indicator used on down or up trades, and then our bull zone levels where it first broke out. And that's all these mean. Trend stability. This is the line we use here, and we come in and we call it trend stability, and that's what this represents here. This line is solid green rather than dotted. It's something we look at on the lows of the day, not being low enough for us not to qualify it for trend stability. So that's all these columns mean. So you'll be able to refer to the strength of the stock that is maintaining high enough lows to stay trend stable, what the profit is if you're staying above the bull zone. That's how you'll use this, and that's your tutorial on the grids. This is a mini tutorial on what the lines mean on my charts if you're a first-time viewer or been a while since you viewed. We're scanning on weekly and daily charts for my condition. When this green line is up, it's my bull zone, and when the red line is up, it's my bear zone. You need to be aware of support and resistance lines and what charts do at levels, and that's what these levels are for. Just quickly as I can do this, and we're going to put a video on YouTube getting more from your swing trading charts that'll be more detailed and look at more stocks, how they react to these lines. But the gist of what you see here is this is what I'm scanning for, and as you can see here, this showed up in the bear zone. It did go down for a few days, but these green lines are support, and that's why it fought for a few days, tried to bounce back up, headed back down again, came right back into the bull zone, a bear zone, excuse me, and continued on down. Now the lines, here's what they represent. A green line is a place that a stock went up to and rejected. So as this green line redrew itself every time we made highs right here, and then it stayed across here for reference points, continues the same line here for reference points. Resistance, when you get above it, becomes support. This green line was drawn way back in the history, and when this stock broke above this resistance level, when it came back down, it held it, it held it, it held it, it tested it and held it again and again. That was support. That's why I want you to be aware of what these lines mean. You'll see them on my charts. And then the activity that stocks do, sometimes they go, that's my first target, that's my second target. Many times stocks go target 1, pull back a little, target 2, then they may pull all the way back to 1 and go again if they're continuing an uptrend. In this case, it did the pull back. This blue line is a 50 period moving average, this orange line is a 200. So that's what I want you to be aware of as well. And then I have a pivot system that consists of this blue line at the top, yellow line at the bottom, and my target 1 and target 2. You'll see this particular day this stock gapped down, huge gap down, open way down here. The low on this stock was 169.68. I'm getting that right out of this box over here, and the value of that yellow line was 169.67. Within 1 cent it held that line and bounced that day for a huge bounce. It's not a support level, but it's where I look for stocks to try to hold. It's where I look, if I'm short, say from here, this is where I'm looking to get out. I'm looking to move 2 levels, target 1, target 2, going up, target 1, target 2. The pink lines all represent places the stock has gone down to and bounced. This pink line is referencing this last pivot low. So as you're selling down into it, it may bounce again. If you get below it, then it becomes resistance. And that's all these lines mean. I just want you to know what they mean going forward. Thanks for watching the video. Let's get started.